Hey guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about DWAC again. Now, there's been a lot of hype and a lot of concern about this stock just because we've had this huge amount of buying pressure, right? The stock went from $9 here all the way up to 180 or 175, and a lot of people at the time were thinking, okay, this thing's going to hit 300, it's going to hit 400, and this is going to be the next stock. This is going to be the next GameStop or AMC, one of those meme stocks that people love and make a lot of money off of. But what ended up happening is we had a lot of these halts, caused the stock to kind of slow down a little bit. The stock fell from 175 all the way down to $74. So it fell over $100 in a single day. For a stock of this size, that's crazy. But the move from, here all the way up here was right around 1,600%, which is absolutely crazy. So one thing, when a stock rallies that much, yes, it becomes overvalued, right? It becomes almost like getting in on pure emotion and no really fundamentals or technicals. You're just kind of buying in, hoping that it's just going to continue. You're not buying on a support. You're not buying on, a resistant breakout or a move. You're just buying because of emotion. So what ended up happening, the stock fell, hit some support near and around this 73 mark. Now from there, we got a nice little bounce from 73 all the way back up to about 120 before selling off quick, right? Went from 120 all the way back down to about $52 to $55 a share. Did find some overall support there and slowly move its way back up to about $70. Did classify some old support as new resistance, which happens all the time. It's very, very common among technical analysis. So this old support where the stock bounced is now acting as new resistance for the stock. So it's just going to have a little harder time breaking above, as you can see. So it hits it. We start selling off a little back down, all the way back down to the same price level at around $54 to $55. Hits that, comes back up to that 70 mark and starts selling off back down to $55. So what do I think is going to happen? So do I think we're just going to have some consolidation? Most likely, this thing will probably fall down to about $50 to $45 a share before we get some buying pressure. Now, the reason why I think this is because DWAC is partnering with Trump Media, which caused this massive move, right? So a lot of people thought that this is going to make the company more money and all that, which it will, but that requires one, money, two, time. There's no fundamentals behind this stock. Right now, this is just a pure speculation that we're going to have this massive growth. And I understand where these investors are coming from because, Trump, he had 80 million votes. So if that's just say half of them, actually download this app, that's 40 million people that are going to be using this social media app. Me personally, I think we'll probably have a little bit more. But causing, a lot of people to hop into the stock wanting the next Facebook or Twitter or Snapchat. Then people realized, okay, this thing is spiked up this much. Maybe I should sell my profit and not worry about it. So there's a lot of mixed emotions in the market and the stock really fell down. So for me, I think a good buy would be under this 50 mark. Under 50 all the way to about this 34. Right in this zone right here, this represents a good buy for me. Now, I do think a good strategy for DWAC, if you think it carries long-term potential, which it easily could, but right now it's definitely more of a high-risk, high-reward play for sure. This thing could easily come back up to 175, but before then, it could fall down to $20 just because the volatility on it is extremely, extremely high. So right now, a good strategy would be doing that dollar cost averaging so you can get a good average price for your shares if you believe it carries potential. Me personally, right, I think I wouldn't go crazy with this. I'm just dollar cost averaging it under 1%. So what that means is, for every $100 you have invested, put $1 into this risky investment. So if you're right, you're going to make a lot of money. And if you're wrong, you're only out 1% of your portfolio. Not to mention dollar cost averaging is a fantastic way to invest with very little downside and huge upside potential, because you don't have to worry about getting in overvalued nor undervalued. You're just being consistent with your investments to get a good average share price. So DWAC, I'm really excited to see kind of what happens with it, but right now I think the stock is starting to sell off, and maybe look at a buy near and around the 200 moving average line to about $45 right in that zone. So guys, that is it. I hope you guys enjoyed it, and if you did, hit that like button, subscribe to the channel, and we will see you guys later. Take care.